Wall Street surged on Thursday as investors weighed the prospects of economic recovery against bellicose remarks from President Donald Trump regarding US-China trade and a whistleblower dire warning about the US response to the coronavirus pandemic. We have seen Dow closing 377 points up, S&P 32 points and Nasdaq 80 points up from the low of 400 points Dow Jones Industrial Average. Finance Minister Nirmala Sitharaman unveiled second tranche of Atmanirbhar Bharat Abhiyan package for poor including migrants and farmers. The highlights is there on your screen, where we can see largely 1500 crore interest subvention for Mudra Shishu loans, 5000 crore special credit facility for street vendors and 70,000 crore boost to housing sectors and middle income group through extension of credit linked subsidy scheme, and 6,000 crore employment push using compensatory afforestation management and planning authority, 30,000 crore additional emergency working capital funding for farmers through NABARD, and 2 lakh crore concessional credit boost to 2.5 crore farmers through Kisan credit cards. Escorts post a mixed set of numbers. Profit jumps 9.6%, revenue we have seen a drop of 16%, EBITDA also declined, margin expanded 190 basis points. Tata Consumer posted loss in fourth quarter on account of goodwill impairment loss of 264 crore. Otherwise numbers looks quite okay. Revenue jumped 35%, EBITDA 77% and margin expanded 300. Annapuram General Finance posted a good set of numbers where interest income jumped 40%, net interest income jumped 33% year on year, and provisions also increased to 756%, PAT increased year on year to 44%, and asset under management also increased to 30%. So operational level is quite good numbers. Asset quality deteriorated a bit. If you look at the GNPA, it is increased 0.88% from 0.5% last quarter, and net NPA also increased to 0.5% from 0.2%. On your screen you can see the derivative activity window, where we have seen the FII turns negative after so many sessions. On futures you can see 17,520 contracts were net to net negative, that is short on the future. Now how come this position has come? That 12,300 around contracts were gone short in last trading session, and 7,205 contracts were liquidated in long positions. So net positions comes around 17,520. This is the highlights from the futures. Now we can see that there was addition of 10,000 contracts in put options, and basically consolidation in long call options. So this is the highlight from the derivative window of FIIs, that they have turned negative after so many sessions, and they have added put as well, so basically turning negative on the index side. On your screen you can see the 15 minutes chart of USD INR of last 20 days. We can see here two downtrend line originating from two different points, and they are just near to the current market price, which will act again as a resistance. So for coming trading session, 75.77 to 75.82 will be quite important level and will be a deciding factor for USD INR, whether that the current move, the current uptrend which has started near from the 75, whether it will sustain or it will fizzle out. So tomorrow I think will be a very crucial trading day for USD INR, because we are nearing to a very crucial resistance level. So price point, one should look at this 75.77 to 75.82, and if it fails to sustain, we will see drifting downwards. Otherwise rally can't be ruled out if it breaks above the resistance level. On your screen it is a Nifty spot 30 minutes chart for last 25 days, and as we have spoken earlier as well, that Nifty was erstwhile making a bearish kind of head and shoulder formation, and in today's trading it was second occasion when the Nifty moved below the neckline, which is very important as per the technical chart pattern, and most of the day it was trading below that trend line level. Now 9110 will come as strong support because the formation has a clear cut rule that the previous bottom in the formation will act as a strong support. So it comes around 9110, which will again be a very important level. Any move below tomorrow, any move below 9110 will mark the beginning of the downtrend. So for trading perspective, very crucial level 9110, because we are very near to that. 9142 is what the closing is on the expiry day, and the upper level from where this trend will come is around 9240. Then 9290 will act as a strong resistance going forward, because that is the neckline of the formation. So 9290. On your screen is Bank Nifty 30 minutes chart of last 25 days, and here also in line with Nifty chart we have seen that it is making also a head and shoulder kind of formation, which is of bearing, which bears a bearish implication going forward, but still the activities are just above the neckline level. You can see here still that neckline which is positioned at 18,800 level. It is again maintaining above those levels, while we have seen in Nifty that it is already broken in today's trading session and closed below those levels. Now 18,800 will be very crucial level in Bank Nifty to watch out for any clue. If it trades below that, sustained below that, will be an opportunity on the short side. On the other hand, if it reverses above 19,450 kind of level, so that will be again a level which will indicate that it is again reversing upward. So these will be two levels to be keenly watched for incoming trading session. Already market is moving in a sideways kind of range, one day up, one day down kind of activity, but overall picture of the market is still bearish on the charts. So levels act as support, and if it breaks, it will give enough opportunity to trade either side.
If you find any meaningful information in this video, then subscribe my channel and press bell icon to get future notification.